Bueno, gente, bienvenidos a el primer podcast de Infusion Victor. Yo creo que nunca habíamos hecho esto, siempre había sido a través de Master Your Money Habits, pero hoy particularmente tenemos una persona especial que dijimos, ok, tenemos que hacerlo para Infusion Victor y estamos súper emocionados de tener a esta persona aquí. Es uno de los traders más grandes en los Estados Unidos y empezó como un jugador de NFL. Jugó para la NFL, para los Chicago Bears, y esta persona también luego se convirtió en un trader profesional. Incluso trabajó en el floor del CBOE, I think it was. Sí. Y también vendió después en el 2016 su plataforma iTrade por $750 millones. ¿Está bien? Así que eso es un montón de dinero. Así que la persona que tenemos is better than me like for 100 times. Así que esta persona que ustedes van a ver la admiro un montón. So I admire you a lot. I can consider one of my mentors. So let's bring applause for Jon Najarian. Welcome.
Thank you. Great to be here. It's wonderful to meet you a few weeks ago, Victor, and to meet the team. And I'm delighted to be doing this podcast with you. So thank you.
Thank you for accepting the invite. I thought for the first time, like, oh my God, are we gonna get it or no? I was nervous. I'm here. I'm still nervous. I'm trying to calm myself down. So our community and myself know you for, let's say, 3, 4, 5 years ago. So we were speaking about you a long time because of your books and all that kind of stuff that we have seen you on CNBC and all that kind of places. So I have a lot of questions for you. So hopefully the time that you have here for me is like at least an hour or something like that. It's going to be sure. Fun. So welcome to our offices down here in Puerto Rico. Once again.
Thank you, Victor.
So our community and myself, we were widely known for the initial activity and for the frame method. Right? We have something in our community called the frame method also, and says by Jon, it's not by me, but it's been very nice, right? To explain them to them, right? So the first question that I have to you is, how did you came from being an NFL person to become a trader, right? So speak me about yourself first of the NFL career, how did it started? How do you get to the NFL? Because getting to the NFL is like those the comebacks or something like that you have to go to the trainings and all that kind of stuff. So how do you get to that?
Well, I played in college. I played in high school. I played from the time since I was 4.
Wow.
So just like the great soccer players and cricket or anything else, the earlier you start, usually the better you're going to be.
Of course.
And I was lucky. My dad was a pro football player.
Oh,
my
nice.
brothers, all 3 of my brothers played pro football. So I was the oldest. I was the first, but I had the shortest career.
So you studied on Gustav Adolfo College, right, in Minnesota? So, and you were studying like arts and history or something like that, right? And obviously, do you study that because it was your passion at first, or because, you know, when we go to the college, for example, myself, we go to basketball, something like that, but we go for the basketball career, not for the, let's say, engineering stuff or something like that. Do you go to that college because you want to study that, but you were more trained to the football side?
Yeah. I think what I did was I went to 3 different colleges.
Nice.
So I kept moving so that I could play football because I wanted to play pro football so badly.
So that was the mindset.
That was my focus. And so I was going to be an architect because I was good at math.
Oh. So and how do you feel about these offices if you're an architect?
Oh, they're beautiful. Honestly, these put offices in New York to shame. It's a great office and there's a great energy here.
Nice.
But yeah, I was going to be an architect. And then I found out most architects don't make much money.
Yeah.
So I said, I don't want to be an architect anymore. But I knew football players made a lot of money and I loved football.
Right.
So I wanted to play pro football. Came out of college, got my chance because I played at Cornell, at University of California,
Nice.
and at Gustavus Adolphus. And when I came out, I played for 4 games because a guy who's in the Hall of Fame now beat me out. It was Mike Singletary.
My Singletary. We're watching you.
Number 50. Fantastic football player, wonderful guy, very athletic.
Nice.
And he was better. I knew he was better. So I've always been pretty honest with myself. When I see somebody that's better than me, I want to learn from them, just like you were saying. And whether that's trading, whether it's football, whether it's art, I want to learn from somebody who's very, very good.
Nice.
And so I knew I wasn't as good as him, but I learned as much as I could, and they cut me anyway. So I came down to the trading floor because my agent, the guy who represented me contract, he was on the floor and he said, "Come on down. I'm looking for disciplined guys. I'm looking for athletic guys because there's a lot of banging around on the floor. Not as much as football, but there's a lot of bumping into each other and elbowing and things like this."
Wow, that's amazing. Yeah. So that was my other question. How from obviously because you were in Chicago Bears, right? So Chicago and the Chicago Bears Exchange, there's something there, right? So you came, so it was your agent that like noticed the discipline and all that thing that you had, and then he invited you to a trading floor?
Yep. And
nice.
My brother and I, when we created our own trading firm years later, we hired a lot of pro athletes. Because generally speaking, to get to the pros, you have to be disciplined.
Yeah, of course.
If you're not, you probably already washed out. So we wanted guys that would have the discipline to cut their losses and take profits.
Wow.
And if you can do those 2 things, you can be in this game a long time. But if you don't have discipline to cut losses and to take profits, you're not going to be around very long.
For very long. Yeah. I know about that. But that's a very good observation that you have on yourself. How do you you told me how you came to the conclusion, but it was only football, or you like whichever sports?
Baseball.
Nice.
I did skiing.
Nice.
But on the pro level, only football.
Only football. Okay.
Yeah. But I still ski to this day.
Yeah. And the traders that you had on the floor, only football players or different kind of
No,
sports?
we had hockey players. We had baseball players. Literally any kind of pro athlete would be great for trading if they have that discipline. Yeah. Some of them, their ego's too big and they won't listen.
Yeah.
So they had discipline about lifting weights or about working out. But they didn't have discipline about their ego. So they thought they knew it all. They're not going to make it.
They're going to make it. Yeah. So in NFL, right, you learn about a lot of stuff, right? So what's the biggest learning curve, or maybe something that you learned from there that it changed your life, or maybe your career path, right? What things you learned from that point?
The biggest things I learned from, I think, were losing. More than winning. My dad was a doctor, a surgeon, transplant surgeon for kidneys, liver, and pancreas. And he would always tell us that, he said, "John, a monkey can do what I do." Because monkeys are very dexterous. They have these little fingers. But he said, they don't know when to do it. So he said, you have to learn when to buy, when to sell, when you're a trader. And he said, if you focus on the discipline, you'll make it. And if you won't, you won't make it. And so I think the same thing with almost anybody who gets to a high level, whether it's, an actor, whether it's a singer, whether it's, a director behind the screen, or, any of us, you've got to have the discipline, and you can't have too big an ego. You can have an ego. Yeah. And that's good, but it can't be too big that I don't listen to Victor.
Of course.
You need to listen to your mentors and listen to the coaches. Otherwise, you're not really getting enough out of it.
How long it went from college to trading on the floor, right? And obviously there's a lot of things that have changed from those times, but obviously you learn a lot from them. So how it went? It was quick before you went to the NFL and then to the trading floor. How long it passed? Like 2 years, a month, or 3 months?
So I got cut the third week in September.
Okay.
1981.
1981.
Yeah.
The things were different, right?
Things were very different. Back then, we traded about 400,000 option contracts per day.
Wow.
400,000. Today, in 2024, we're averaging 50 million per day. So that's like this.
Yeah,
right?
of course.
I mean, many more trades per day. And the trading floor was also open outcry, as we call it. So bam, sold, like that.
Really like that.
If your hands are like this, you're selling. If your hands are pulling towards you, you're buying. And that's almost completely gone now. Now everybody trades like Victor, and everybody trades like me with a mouse.
Yep.
You just point and click. It's much different than being on the floor.
Yeah, that was different. So that experience from like saying that you're buying and selling there on behalf of clients or
just for me?
For you.
Yeah.
Wow.
So the way it worked back then, Victor, was you would clerk or intern for a trader for probably, I think I did it for 9 months. The first 3 months, I hated it because I didn't understand what was going on. But then after 3 months, I knew what was going on, and then I loved it. But I still needed to put in more time with my mentor so that I could learn.
Of course.
And then once I did, I started trading on the floor with a small amount of money, all the money I had. Like $20,000 was all I had.
Yeah, wow.
That I made from the NFL.
And you grow from there, right?
From there to then you go to your mentor and you would say, will you back me? Will you put up the money? And he's looked at how you're trading and he says, yeah, I think I will. I'll put up $100,000.
Perfect.
Now I can trade a lot bigger, but I have to give half, 50% to him for backing me.
Yeah, of course.
And then as you make more and more money, he takes less and less of a cut. He says, okay, you've made me so much money, Victor. Now I'll only take 25%. And then eventually you go off on your own. And you keep 100% of the money that you make.
Wow. And to enter to the CBOE, for example, or for on the trading floor, do you have to pass some kind of regulated stuff? And how it went on that, right? Because it's not that easy to become like a trader on the floor, right? It's now it's very easy. Everyone can be a trader, right?
Everybody can trade upstairs. On the trading floor, you had to pass a background test. You had to pay $3,000 to the exchange for the privilege of taking the written test. And then if you passed it, then you could go down on the floor, but you still had to rent a seat. The seats were renting for about $5,000 a month to stand on the trading floor. So just think now, you guys, when you're learning to trade, costs you nothing to stand there and watch the market.
Of course.
But you might have to pay somebody like me or Victor to help coach you and learn how to trade. But you don't have to have a seat anymore. When I was on the floor, I needed a seat. So the seats went from, let's see, when I started trading, Victor, a seat would cost you about $140,000 to buy it. So since I didn't have 140, I had to rent it. And you rent that seat for $5,000 a month. Then it goes to 6, then it goes to 10, then it goes to 15. And the seat went up from, when I started in 81, about 140,000. By the time I was done trading in 2004, the seats were trading for 1.2 million.
Holy God.
And then they said, okay, now we're going to turn these seats into a publicly traded stock. So we're taking all of your seats away from you guys, and instead we're going to give you shares in the company, in the CBOE, or in the Amex, or in the Philex, whatever it was. The seats went to 10 million when they did that. So
Wow.
it gives you an idea of how much money the seat was worth to the individual traders.
So in that time that you were trading, right? So you were buying and selling. You didn't have time to like hedge yourself, something like that.
Oh no, you'd hedge all day.
All day, right?
Yep.
Yeah. It was yourself too, or would you have a person that helped you around the day?
I'd have clerks that would help me
On the edge side, right?
1 or 2 clerks, because we didn't have computers on the floor. So you would sit there keeping track of how long or short you were in your head. And meanwhile, your clerk would be taking all the tickets you wrote on, and he or she would be keying them into a risk system and saying, okay, Victor, this is how long you are, or this is how short you are. And then you need to start taking profits or cutting losses and all the rest.
So it was very quick also, the buying and selling. So it was not that complicated. So for example, let's say now today, let's say you want to short or maybe buy something, you need some allocates or something like that. How do you make the allocates for stuff that you were shorting or something like that? Did it make those time of stuff or yes?
Yeah, we would. I mean, when I was on the floor, there were usually specific pits you would trade in. So I traded in the IBM pit.
Oh.
So I would trade IBM stock, Starbucks, and Capital Cities, which is ABC now.
Oh.
So I would trade those 3 stocks exclusively, trade options on them. Broker would come into the stock and say, how are the IBM 155 calls? Or he'd just say, I need the IBM doubles, double nickel or whatever like that. And then everybody'd shout where they would buy it and where they would sell it. They'd shout out 50 bid at 60. And he'd say, buy him, Victor, buy him. How many? And Victor'd say, I'll sell you 100. He says, no, I only have 50. Okay, sold you 50. Check. And then you key it into your system. And now you're knowing you're getting longer or shorter throughout the day. Much different than right now where you can
it was
wait.
A very stressful job, right? For back then, right?
Very stressful. That's why I have hair like this. That's why my head looks like this, everybody. But so Victor's head looks like this because he doesn't have to do that. He can be a sniper. He can sit around upstairs and wait and then say, okay, I like this one now, bang, like that. So it's different. Just as much skill, but it's different because he doesn't have to make a market. And neither do I anymore. Yeah. Now I'm a sniper too. I sit around and wait till I see an unusual activity, and then I jump on that and buy it. And if it works, I start taking profits as it rises. And if it doesn't work, I cut the loss right away and move on to the next trade.
Perfect. So how was I don't know if if you noticed the initial activity from the day that you began on trading, but how do you track the unusual back then? Or do you happen to do that or no?
Back then it was much harder.
Right.
Because we didn't have the computers to do it.
Yeah.
So you had to just know or hear a big trade that was happening over in the
other exchange or something like that.
Yeah,
right?
on the 3M pit, in the AOL pit, in the S&P 500 pit. You had to physically hear it or see it in the pit to know something was happening. Now we've got servers down there in the data center that are just looking all day for fractions of a second, nanoseconds really, what's being bought, what's being sold, and we're looking for the big blocks traded on the offer, meaning somebody bought a lot of calls or a lot of puts. That's what we care about because we're surfers.
Of course.
We think of ourselves as, okay, I'm just sitting there waiting, sniper or surfer. I'm just sitting there waiting for the wave, and all of a sudden the wave starts to pick up. You paddle fast in that direction.
That's a very, very good explanation, right? Of how do you trade the markets right now. And I think that's the best way to trade the markets, right? Because at the end, like I told myself, I learned that from the book also a couple of years ago, that you can, with all the size that I could put on, I will not move the market, right? So I have to look around what's going on and be trading like what's going on with certain kind of options, the expiration of those options and all that kind of stuff, right? Yep. So it's very different from back there, right? When it started like to get a little bit more technological or something like that, that you like took the shock that it was, oh my God, this is changing right now.
Yeah, we could see it coming because the exchange started giving you, you know, not a cell phone, but something like a handheld computer that you would hold in your hand. And as they got bigger and faster, it would be something they'd strap it to your arm and you'd have a full screen, like a 12-inch iPad would be strapped to my arm. It wasn't an iPad, but it was something like that. So every time I make a trade with Victor, I touch his name on my computer screen and I hit the number of contracts, and then it clears instantly, tells me how much risk I've got. I can send an order into the exchange to hedge against what I just bought or what I just sold. But as things got faster and faster in the pits, eventually men and women couldn't keep up.
Of course.
We couldn't trade as fast as the computer. So that's why I sold that one firm to Goldman Sachs. It was a high frequency trading firm. Nice. I saw it as this was coming, and this partner of mine on the New York Stock Exchange and I created this high speed trading platform. And then eventually we sold it to Goldman Sachs.
Wow.
And they use it to this day for their high frequency trading.
Wow.
Yeah.
So still using it.
Still good. And, you know, they change the algorithm every once in a while. But yeah, it's trading became faster and faster. So by like 1998 to 2000, it was getting too fast.
Right.
And you could lose in literally 1 or 2 seconds what took you a month to make.
Yeah.
So we said, okay, this isn't for us.
Yeah.
We're going to move on and let somebody who's got a lot of money and a lot of programmers, because routinely it would be hundreds of thousands of dollars a month in tech that it would cost you to be able to trade at light speed.
Yeah.
It wasn't worth it for us.
Yeah, of course. Because when you want to make that kind of money, you have to put size on, right? Mm-hmm. So like buying and selling quickly on those and people hedging those positions so you don't get caught. So you sold that company to Goldman. Mm-hmm. And then what you do next?
So then my brother and I, we still knew that we had to either raise a lot of money so that we could trade like Goldman, or we had to sell the firm. So what we did was, for the next 4 years, we traded for the partners of Goldman Sachs. We traded their money for them.
Beautiful.
So that
we took a cut, right?
Yep, and we got a cut. And it was like 75-25. We got 75% of the profits.
That's good.
They got 25. And we did that until 2004. And then we sold the whole firm to Citadel, to Ken Griffin. And he
one of the biggest men right now, right?
Yep. Back then, he was one of the biggest hedge funds. Today, he might be the biggest true hedge fund. And he's also huge high-frequency trading.
Right.
And Ken's brilliant. I'm a fan.
Yeah, I'm a fan, too, of that guy, too.
Yeah, he is very, very good. And
how do you feel yourself by selling the biggest hedge fund right now, a company of yourself, to that man, right? How do you feel yourself?
He's been nice to me. He's had me speak at some of his big get-togethers and things like that. But, you know, Ken is pretty unique.
Yeah.
And very fast mind, just works like this. And he hires the best of the best.
Right.
So if you're working at Citadel, you know, you're considered one of the best of the best. And obviously it was a big loss for Chicago when he moved to Florida, but Chicago, he thought, became too dangerous. So he said, look, if you can't make Chicago safe for my employees, I'm moving.
Yeah.
They didn't help, so he moved the whole firm, billions and billions of dollars in salaries and bonuses that would have been
of
tax
course,
dollars
on
in
Chicago.
Illinois,
Yeah.
Gone like that.
Yeah. Those people don't understand that also, right? How the economy works and how much money this kind of person bring to that, for example. Mm-hmm. Like it's happening here in Puerto Rico. Some people are concerned about, like, there's a lot of thing going on in Puerto Rico, but there's a lot of people that are coming with money and investing in Puerto Rico. And let's say, for example, I couldn't have this kind of Like I think life is like with the time and things get oriented. If didn't happen this with Puerto Rico, I couldn't never meet you, something like that.
Mm-hmm.
So I see that different, right? I think some people have to change their mindsets to see opportunities where they're not seeing like other people, right? That's a trade. That's where traders come in, right? Seeing opportunities where other people don't. But like that thing happened with Ken Griffin that is happening here in Puerto Rico. Have a lot of people that I think we would never meet in my life without this opportunity that people Puerto Rico brings to other people to come.
Yeah.
Right.
And the people are great here.
Yeah.
The
weather
is fantastic.
Back in Chicago was complicated, right?
Much better here. Kite surfing, snorkeling, boating, all of that. I mean, it's fantastic. Puerto Rico, I think, could become a big trading hub eventually.
Right.
It's got people like Victor that are here carving out these niches, and a bunch of hedge funds are here as well. But I think given how close it is to the United States, to the rest of the states.
Yeah, of course.
And how easy it is to go back and forth. Yeah. High-speed internet. I mean, that's all you need.
And the internet comes from Miami also. We have the fiber coming to we choose this place. One of the things that we choose this place is because of the internet, right? Because we have the fibers coming from that. Because when I tell people that the internet comes by the ocean or something like that, those lines, they don't believe me. So the two of them, they come nearby this building. So we have like the two biggest companies of fiber optic here. So if we don't have one, we have the other one. So we have big internet that is coming from Miami. And Miami is like 1 hour, 2 hours and 10 minutes from here. So it's nearby though.
Yeah. And I use the same. I use the fiber that Victor and his team use. And I use Elon Musk's Starlink as a backup.
So it works.
It's really fast too.
It's really fast and it works?
Yep.
Nice.
Always up. I mean, maybe during the hurricane, it's not so good.
Yeah.
Because you can't see the sky because it's so dark. But I've only had one hurricane in the 3 years that I've been here.
Nice.
And it worked for most of that, but then it started cutting in and out.
That's changing like a lot, right?
Yeah.
The Starlink thing. I saw a video the other day on Twitter, I think it was, well, now X, how they're launching like every single day new satellites, and it has become very crowded, right? But that's good also because you can now have access to internet in remote locations.
Yeah, you can have it on the boat, you can have it on the plane. It's everywhere.
It's everywhere.
So God bless it.
What do you think about that man specifically?
Oh, I love Elon Musk.
Right?
Yeah, because he just doesn't care what people think. He cares this much, only this much. And I think most of us should be more like him.
Yeah.
Because, he doesn't care if you're black, white, gay, woman, man. He doesn't care. But he doesn't want you to tell him how he should live.
Of course.
And I think the same is true for me, that I just want, I have friends, all different colors, all different races, all different genders and all the rest. Doesn't matter to me.
Yeah.
As long as they're a good person, I don't care.
Yeah, me too. Yeah. So have you met him?
Elon? I met him at the NASDAQ.
Nice.
Yeah. I'm not a big friend, but I've met him twice at the NASDAQ, and he has a phenomenal team with him too.
Yeah, of course.
As you know, and as I know, nobody does this on their own.
Of course.
Whether it's Starlink or whether it's what you're doing right here in Puerto Rico, you need a team.
Of course.
And he respects the team. He pays them well. Most of the people stay with him a long time.
That's great. So when you sold the company, going back to when you sold the company to Goldman, it was Mercury Trading, that company was called?
Yep. It was Mercury. Well, the one we sold to Goldman was Financial Auction Network.
Oh.
It was the high-speed trading thing.
Okay.
The one we sold to Citadel was Mercury Trading.
Oh, Mercury Trade. Yeah. And you create like an algo or something like that? It was, what type of thing do you sell to? What was the company? What the company was? What it was making that time? Like what the softwares and all?
Citadel, they just wanted all of our stocks. We were the specialist in 80 different stocks at that time.
Wow.
So they wanted to buy our access to that market.
Oh.
So they took over as the specialist in 80 stocks. And the next thing we did was start building out a brokerage. And so we built out Trade Monster, Option Monster, 401k Monster. We created all these monsters and then eventually built that up to where we sold it to E-Trade.
Wow. So it's like for us, for example, we're creating like Infusion Places, Infusion Investments, Infusion Holdings. We have different kind of companies with the same. So it was back then with Monster.
Yeah.
That's nice. So when it came to the 2000 and 2001, the dot-com bubble and all that kind of stuff, where you were at that point in your life, or maybe as a trader, do you caught every single move from those big tech companies?
Never catch every move.
Okay.
But I caught a lot of moves. I mean, luckily. But we were just starting to use our algorithm to trade back then, Victor. So our algorithm would find the big buys. And at that time, they were buying a lot of puts in tech stocks. So what do? I buy a lot of puts in tech stocks.
Of course.
And then they all went down. We cashed out. Then they all started to either go out of business or come back. Some of them came back in a big way, like Amazon, obviously.
Yeah.
Went all the way down to $2. Don't you wish you owned some Amazon at $2? But a lot of people sold it all the way down and then didn't buy it when it went down. Because some people can only trade bearishly, meaning they can only sell.
Oh.
Other people can only buy. And I want to be the kind of trader, and I know you are too, Victor, where I can buy it and make money to the upside, or I can sell it and make money to the downside.
Yeah.
I want to be able to make money both ways, because that way every day is interesting.
Of course.
For me as a trader.
And you can change your mindset quickly. There's a couple of people that they cannot change their mind when they're seeing upside. They cannot like trade on the downside. Like
True.
They get freaked out. I know a lot of people, but I love to trade both sides. A couple of years ago when I started, I was trading more on the short side. For example, I one of my biggest losses in trading was shorting Shopify. Yeah, so back then.
But I bet you were trading the stock, not the options.
Yeah, exactly. Yeah.
Because if he was trading the options, folks, that's the best thing that he can teach you too, is that by owning a put, you have the right to sell.
Of course.
And you know exactly how much you can lose when you buy that put option. And if he would have been trading puts on Spotify, that's one of the great lessons I'm sure that you learned. Now, when he wants to short the AI stocks like NVIDIA or Micron or Super Microcomputer or whatever, he can buy a put. Mm-hmm. And he's going to make the same money as shorting the stock. But if he's wrong, or if his timing isn't right, you're only going to lose a small amount. That's the key to options.
Exactly. And because you don't have that big exposure of planning yourself. So that's the biggest thing about options, that you can have that big trade on the downside if it comes down. So when you try to see the initial activity, when you get in that rhythm, right? Because maybe it was after 2007, 2008, that everything was digitalized, like in the internet and stuff like that. How do you came with that specific thing?
So what happened with the Great Financial Crisis, or GFC, they call it, right? Because all these people, if you saw the movie The Big Short, and I know he did.
Yeah, of course.
For a lot of you, if you saw the movie The Big Short, people were leveraging their housing bets too big. And eventually they lost, and all those housing stocks went down, banks went down, the whole economy was going down. And we had to be bailed out by the federal government.
Of course.
We started seeing unusual activity in Bear Stearns. In March of 2008. And then things started to accelerate. It started to get worse and worse, or maybe that was 2007. Started to get worse, and they're buying way out of the money puts. Then they're buying way out of the money puts in all of the brokerage stocks and all of the banking stocks. So it wasn't just Goldman Sachs picking on some people. It was Lehman Brothers going down, Bear Stearns got bought by Jamie Dimon for nothing. All of these stocks started tanking because people had panicked and they were selling everything.
Yeah.
So all of those puts that were being purchased helped us to follow that and make money to the downside.
Wow. So, a question, right, that I have. When you started trading options and all that kind of stuff, right? Did you how I can say this? When you started trading options, did you believe yourself like it was going to get this big?
No. I thought it would get big. And
but
I
not
remember
that this big, right?
Yeah.
Like we have zero DTE right now.
I was on the board of the CBOE.
Nice.
Which is now called CBOE Global Markets. And the symbol is, I think, CBOE still. But it's publicly traded stock now. Like I say, when I started, we were trading 400,000 options a day. And I said, eventually our exchange, here, we're going to do 1 million a day, just this exchange. And the other guys on the board laughed at me. And they said, come on, how are we going to get 1 million options a day? And I said, now in 2024, 50 million per day trade around the United States. So did I know it was going to get that big? No. But now I think 100 million is, in the not too distant future. I bet you, Victor, that within 3 to 5 years, we're doing 100 million options per day. So imagine the demand that puts on your education.
Of course.
Or on your investment through Infusion and so forth, or Market Rebellion. There will be so many people that want to learn about options, so many people that want to trade, because when it's moving like that, that's why crypto is so exciting too. I mean, I could show you, everybody's talking about Bitcoin in 2024 because it went up from 20,000 to 74,000. And everybody's like, yeah, this is great. I could show you 5 stocks that have done that.
Of course.
I could show you NVIDIA, super microcomputer, AMD. Oh my gosh. I mean,
I trade AMD. That was my biggest trade this year. It was kind of crazy.
Boom. That's what you do.
And with the options, you trade like 20,000% of something like that goes on sometimes.
Oh yeah.
So people sometimes see the big move on crypto, but when they go to options, you can see much bigger percentage change on options than on crypto right now.
Oh yeah. And if you think of it, in the last month, crypto's gone from 60 to 74. This is now March. So from 60 to 74,000 back down to 63,000, and it's bouncing around. Okay. Put that in terms of a stock. It's a $63 stock. It goes to 74. It comes back down. We see that all the time.
Every single day.
We see it all the time. So it's not that, that's not to say you shouldn't trade crypto. It's just to say that people think, oh, these moves are so big. No, they're not. And they happen all the time in stocks, not just in crypto.
Of course.
And in stocks, you have a lot more ways to hedge on listed exchanges rather than going to some of these offshore exchanges for crypto that might be a little dicey.
Yeah. And also some kind of broker doesn't have, they can go bankrupt, and your assets is there. You will not get it back after there's a couple of stuff. In maybe you will never get it. So sometimes you make a lot of money, but that's on paper, because if you're gonna take it out.
But how many people have ever lost money in the stock market because they couldn't get money from Merrill Lynch or from Morgan Stanley or from our firm? Zero. Since the crash of 1929, 0 people have ever lost their invested money because the brokerage went out. If the brokerage goes out, all the other brokerages pay for it. They call that the Depository Trust Company. They call it Options Clearing Corp. All the risk is borne by every brokerage as well as the federal government. So nobody has ever lost all their money because of a broker going down in the United States.
Yes.
They've lost their money because they've made dumb investments, or because somebody defrauded them, like, Enron and WorldCom and things like that. but not because Morgan Stanley didn't pay you your money.
Of course. And then withdraw and all that kind of stuff. That's the main thing that I like from the stock market, that you will never get that, right? There's more safe, and also your the accounts in the big banks, for example. And now that we have the too big to fail law in some kind of banks, right? That we have from the Trump administration, that they put that if there's a bank that goes above $400 billion in assets, I think it was, the Federal Reserve have to get to intervene with the asset and all that kind of stuff. Mm-hmm. Because at the beginning of last year, the issues that the banks were having with the bonds and all that kind of stuff. So
yeah, First Republic, Silvergate, Silicon Valley Bank, all of those basically had a lot of trouble last year. They didn't have the money at the moment the customer wanted it, and the bank has to have it when the customer wants it.
Of course.
Or they shut the bank down.
Of course.
They shut the bank down. They handed off the assets to JP Morgan or to Citigroup or to Wells Fargo or whomever, and those banks just went away.
Nice. So let's go to 2005 quickly for Option Monster, when your brother, Pete, you founded the online brokerage, and you provided market insight, right? And also like commentary and trading strategies down there.
Yep. We built Option Monster, which would give signals from our heat seeker algorithm. And then we had the brokerage, which was Trade Monster, which basically executed trades for people. Two separate companies.
Like 20 years ahead from things that were happening.
Yeah, luckily. And we were number one rated for 4 years in a row by Barron's. And then we got bought by E-Trade. And then E-Trade got bought by Morgan Stanley.
Yeah, right. Can you say the amount, or is prohibited that you can say the amount of how you sold the company for?
No, we sold it for $725 million.
Damn.
Yeah. So
that's a lot of money, right?
And the next one we're doing right now, SoGo Trade, and follow Victor, and he'll give you some good ways to get into that one. But that one, it's already in 85 countries. We've been growing it out now, and it's going to be a monster. It's going to be 10 times bigger than Trade Monster.
Damn.
Bang.
I bet. And also have you have founded Investitude in 2016, I think it was?
We did, and then we rolled it into Market Rebellion.
Market Rebellion.
Yep. So Market Rebellion is subscriptions and education. And one of the reasons that I'm here with Victor is I want Victor and his team to be selling some of our education and subscriptions to the Spanish-speaking world.
Of course.
The Spanish-speaking world is massive.
It's massive.
And you guys are very impressive with what you've built so far. So
thank you. So what's your biggest goal? Because with behind teaching the average person, right? Because I have the goal, because when I see the pianos from the students and all that kind of stuff, make me very, very happy. And also you learn a lot. What's the teaching goal that you have in mind, and how big do you want to get into the educational space?
Oh, we want it to be huge.
Right.
Because it feels great to pass it along.
Like the mom
pay it forward,
recipe.
If you will. Yeah, because you're showing somebody else how to do it right. To a certain extent, if somebody showed you how not to crash your car, you'd be grateful to them. Oh, thank you for teaching me not to crash my car, because crashing your car sucks.
Of course.
You lose a lot of money and all the rest. Well, that's what you and I do. We teach people not to crash their portfolio.
Mm-hmm. Yep.
And if they pay attention and they want to, they can grow their portfolio at a much faster rate. I mean, as you heard him say, 20,000%. People say, oh, there's no way you can make 20,000%. Yes, you can. If an option goes from 10 cents to $10, you tell me how big a percent return that is.
Yep.
It's not 100%. It's not 200%. It's hundreds of percent, thousands of percent. And you can do that with options.
Of course.
So if you want to keep from crashing your portfolio and learn how to grow your portfolio faster with less risk, options are the way to do it.
Of course. Beautiful. So we're getting to the good stuff right now, and the last stuff also. In 2018, you, brother, and you released the book Follow the Smart Money, right? Mm-hmm. When did you become aware about the unusual option activity and reading the tape? Does it come from back the days from the stock exchange, or
it came from our days on the floor when we'd be standing down there? And one day, it was my birthday actually, and we lost millions like that. Snap of your fingers.
How do you carry that? Sorry for
it. Sucked. It was terrible. But you've got to, cut and move on to the next trade, as you know. Hopefully none of you ever lose millions of dollars, but we had to make a market. You don't have to trade every day. Mm-hmm. I had to trade back then, every day, every second. When the market's open, a broker could come into the pit and say, John, how are these AOL 80 calls? And we had to make a bid and an offer. My hands are towards me, I'm bidding. My hands are out, I'm selling. So they wanted a bid and an offer every time they came into the pit. So every once in a while, one of these guys was really good, and he knew the stock was about to move big. Maybe it was insider trading, maybe it was just luck, but we started to think, look, this isn't just luck. Mm-hmm. This is somebody knows something. So if we could follow all over the floor, not just in Chicago, but in New York and Philadelphia, in San Francisco, if we could see all of that in one place in the data centers of the US, then we could follow that smart money as well. Yep. So that's what we built our algorithm to do. Nice. Follow that smart money. And from that day forward, 80% of my trades are done that way. I follow that smart money.
And you do the follow the smart money, but I think you have the option seeker, I think it is, right? From the heat seeker from Market Rebellion, right? Yep. So you have a program that search every single time the activity from the markets, right?
Yep. All, throughout the day, the 11 million quotes a second I spoke of, it's looking through all of that. And then every once in a while, it's just going like this. And then it goes, ding. It says, here's one, Victor. And then Victor goes, oh, look at this. Look at all these calls. And then we just follow that.
Yeah, perfect.
So it's not that we're that smart. We're just smart enough to build something to follow the biggest and best traders in the world.
Yeah, and also disciplined enough to cut the losses and long the run as soon as it gets, right? So you were saying that you were controlling the both sides, right? The bid and the ask. Right now, we don't have that, right? So, for example, I can go with a sniper.
He's a sniper.
Yeah. So it was a very big difference from, let's say, for example, I see Citadel have to do the same thing. They have to trade every single day. They have to provide liquidity to the market. So at the end of the day, for example, how do you clear all the brokerage money or something like that where you were doing that? You have to create the liquidity for both ends.
But we don't have to anymore, of course.
Of course, no. Right. But back then, how?
Back then it was a problem because, as you know, though, the stock market is all supply and demand.
Of course.
So if there's too much demand, we keep pushing prices higher. Mm-hmm. So the stock might not even be moving. But if everybody's coming in to buy this particular call, I'm saying, okay, now they're 50 cents. Now they're 75 cents. Now they're 80 cents. Now they're 90 cents. And they're still coming in buying them. And I'm buying the stock the whole time while these guys are buying the options from me.
Beautiful.
So on the other hand, when they're coming in selling, I'm saying, okay, the option's 75 cents. They say sold. I say, now it's 50 cents. Sold. Now it's 20 cents. I'm lowering my bid the whole time. The whole thing is just basically managing your book, just like an odds maker in Vegas. When you go to Vegas and you wonder, why are the Kansas City Chiefs
That's a very good explanation.
Well, they're favored by this because everybody's coming for them.
That's a very good
they have
explanation.
to keep moving the prices up.
I think that's the best explanation so far for that. Yeah, because it's different back then, and also for the market makers and us, right? Because we don't have to do that. We can go sniper like you told. Mm-hmm. How do you feel about the insider trading? How do you feel about it? we know that it always come on and people doesn't pay attention on it. But how do you feel about that? And what's the most important thing to see on that?
That you realize some people have better access to information than you do.
Yeah.
I know it because I've watched it for 43 years. I know people have better access.
Of course.
That, some Victor somewhere in the United States or in Spain or wherever, Colombia, has people going to every single conference because he's got a team of 70 people. And one of them's going to this conference about EVs, electric vehicles. This person's going to a conference on AI, artificial intelligence. This person's going to the conference on high-speed computers and all the rest. And they're going to know more about those things than I am.
Yeah,
because
of course.
If you just read Yahoo Finance or Bloomberg or Fox Business, whatever, you're going to get a picture, but not everything that all of those people get. And they're investing billions. I want to follow those people.
Of course.
So once somebody finds all that stuff and they tell Victor, hey, I'm at this conference and I'm telling you, NVIDIA is blowing it up. They're crushing it. Then he's going to say, well, I'm going to start buying a lot of calls.
Yeah.
And I'm going to see him buying those calls. And then I can coattail on him.
What's the most important thing that you look for initial option activities? What things the most important thing for you?
Bought on the offer.
Bought on the offer.
So again, you can sell an option, but then you only make what you collect.
Mm-hmm.
When you sell an option for $2, every option's for 100 shares. So if you sell an option for $2, you collected $200. That's great. So if you sold 10 options, you've got $2,000 for doing nothing, but you did take on the risk. Just like Victor said about, if you short a stock, you can lose a lot of money when the stock goes up. If you short an option, you can lose a lot of money when the option goes against you. You short it, you sold it because you think it's going down in value. But if it goes up in value, that's on you. So you're losing money faster and faster. So what we care about is the people that are buying options. Whoever buys those options is looking for a leveraged return to the upside if it's a call or to the downside if it's a put. Perfect. And those are the ones we follow. So the single biggest thing, Victor, is we're looking for the people that are buying on the offer, not the people that are selling. I forget about them.
Perfect. Thank you. That's a big lesson here. So we want to talk about right now, this year, about the biggest trade. I think it was this year so far, maybe the whole all time. It was the Meta, the gain of billions of dollars of market cap, right? I saw your video, a reel that you saw a couple of in the money call options. How do you saw that? Like, it was quick, or how was that?
So they were buying like $30, I think, in the money option. So Meta might have been trading 270, 280. I don't know for sure, but the options were like $20 or $30 in the money, and they were paying a lot of money for these, like 20 or 30,000. 20 or 30,000 options, folks, is 2 or 3 million shares of stock. So imagine 3 million shares of a $270 stock. That is huge. You're talking something close to $1 billion worth of stock. I want to run in the same direction as the people that are doing that. So what happened? They blew out earnings. They talked about how AI is helping them cut staffing and overhead expenses and so forth, as well as how well they're doing with all of their initiatives with the Oculus and Instagram Reels and all the rest. So that was a very lucky trade. But when we saw it, we just followed right along with that one. This week, we had one in IMVT, I think it was. And the stock went from $10 a share to 22 in one day.
Wow.
They came in the day before, bought all the calls they could buy at $10. They said, we want to buy these calls. And the guys in the pit electronically were saying, sold, 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 sold. And the next day, they're buying them back for $12, the calls that they sold for $1. So That happened just the third or fourth week in March. Those are the kind of trades we love because somebody bought a lot right at the money. I love following that.
Beautiful. What's your macro perspective of the market right now?
I think the market still goes up because the Fed is going to be pushing out when they're finally going to cut rates. And I think they cut sometime in the third quarter. Yeah. I don't think they cut this quarter at all, not in the April, May, June timeframe. But I think in July, August, they could actually cut. And then I think the market tops out at that point.
Right.
For the short term.
For the short term. Yeah.
Not forever. Just
short term. Tech has definitely changed the trading. How do you think AI will change trading? I know that maybe AI has been a longer term on already on a couple of firms because of the algos and all that kind of stuff. So that's something like compared to AI. How do you think it will think that it will benefit the retail traders? Will it affect the retail traders? How you feel about AI in trading perspective?
Well, like we use AI. We have an AI that we use to scan 35,000 global stocks.
Wow.
And we call it Rebel Research.
Nice.
And it's AI.
Where can people find it? Sorry.
If you go to marketrebellion.com/research, they can get it. It's $19 a month.
Beautiful.
Super cheap. Why? Because no human being has to do anything. It gives you fundamental research, technical research, minute by minute, as well as sentiment research. So it gives you all three things. If you love technicals and you want to know where's support, where's resistance and all that, here's all the 50-day moving average, 200-day. Here's where the stock is right now. It's this far below or this far above these moving averages and things. Here's the fundamentals. So here's their free cash flow, all of the stuff that people in the fundamental side want to follow, as well as sentiment. It's got Reddit, X, it's got everything that people can follow. And for $19 a month. So we use artificial intelligence as part of what we do. I think it's going to take jobs away, unfortunately, for some people. But hopefully they'll find other jobs. But
of course.
It's definitely going to be something that people need to pay attention to in terms of impact of regular working people and their jobs.
And for the last two questions that I have for you, how do you get to that this is what the last two, promise.
Okay.
On the NASDAQ, how do you get?
I like it.
How do you get to do like commentary stuff on the NASDAQ?
On the floor?
On the floor, yeah.
Next time you're going to be in New York, let me know and I'll take you there.
Oh, I love that.
Yeah, he and I should, you guys should vote. He and I should do this interview from the NASDAQ in front of the big NASDAQ wall.
If we make that, yeah, I would be happy for that.
I'll make that happen. We can, because we shoot all the time at the NASDAQ.
Nice.
Because, full disclosure, NASDAQ, a lot of friends of mine at the NASDAQ, they do a great job promoting stocks and prudent trading styles. They don't want pump and dumps and all that, but you and I aren't about that anyway.
Yeah.
We're about teaching people how to be better and how to trade, and that's good for the NASDAQ. So, like I say, we'll be able to shoot at the NASDAQ sometime this year in the next couple of months if he wants to come
up. Of course. Let me know. We're going to go.
It's a 3.5-hour flight, for God's sake. Yeah, he's already
For
there.
me, I'm already there. But my hands are sweating right now.
We will do that. But yeah, we do it because, like I say, I know the CEO. I reached out to her and I said, look, I've shot for CNBC and for Fox and for CNN here on your floor. Would you let us shoot our show, The Rebel's Edge, from the NASDAQ? And she said, sure. Talk to these guys. We'll set it up.
Beautiful.
So we shot from the NASDAQ a couple different shows. And I'm sure if you and I go up there and I tell her, hey, I'm bringing Victor Gabriel from down in Puerto Rico, and we're going to reach out to all the Spanish-speaking world, they'll love it.
Perfect. Sounds great. Sounds like a deal for me. So,
and then we'll go out for some good food too.
Yeah. That's nice. Thank you a lot for coming. Thank you for taking our invitation. Thank you for at least
We'll
being...
do it again.
Yeah. We'll do it again on NASDAQ.
Yep.
That'll be great. Also, one of my biggest life dream is to get into the New York Stock Exchange one day. So
We can do that too.
Okay, let's do that.
Yeah,
I love that.
The only thing is we're going to spoil him because we can do them both in the same trip.
Let's do that. So thank you a lot for coming, and hopefully we can work a lot of stuff together from now on.
Cool.
Thank you.
Love it. Thank you very much, Victor. Thanks everybody here at Infusion.
Thank you. Bueno, gente, ahí lo vieron. Lo pueden seguir en todas las redes sociales como Jon. There's something that you want to people look for you? How they can look for you on the social media company and...
Social media, it's just my name, JonNajarian, Jon Najarian on Twitter, or the Dr. J on Instagram. I'm just with Market Rebellion. That's the easy part.
Market Rebellion. I love that.
These are our NASDAQ shirts and our NASCAR as well. So we wear these because our NASCAR team, that we used to have a NASCAR team for 2 years.
Wow.
They wore these shirts.
Nice. That's great. So there you have it. Gracias un montón. Déjenme saber en los comentarios si quieren ver más podcasts en mi canal de YouTube. Y nada, espero que les haya gustado. Recuerden darle a los likes, suscríbanse al canal y en los comentarios a quién quieren ver próximo acá con nosotros. Nada, hasta la próxima.